Hi everyone, welcome to my video. I'm Doris and I'm here to share with you about my stock account update and also today's market. As for right now, my stock account has a total loss of $5,556. Today, I'm going to talk about the US non-farm payrolls report, how it will be the focus of monthly hype. Stock market underestimates the risk of recession, and it is expected that the US stock market may fall by another 22%. So first, let's take a look at my account. Just by today, it lost $872, which is a loss of 0.91%. Currently, I'm in hold of 1,300 shares of SQQQ and 500 shares of DRV. In total, DRV dropped by 10.11%, and that's a total loss of $2,795. And today I lost $40 in total. For SQQQ, today I lost $832, and that's a total loss of $3,151.57. Then let's take a look at the market today. Today market showed a bit of variation. The Dow Jones Industrial Average decreased by 0.34%, or 112.96 to 33,517.65. Nasdaq Composite Index rose by 0.63%, or $66.36 to 10,635.65. And the S&P 500 Index decreased by 0.08%, or $2.99 to 3,892.09. And if we look at the industry heat map, it showed a bit of variations. About half of the industry showed a decrease and half of the industry showed a gain. The aerospace and the drug manufacturers decreased the most, and the auto industry and the semiconductors industry rose by the most. If we look at the S&P 500 index stocks, we can see that in the healthcare industry, most of the companies that have a great share in the market altogether decreased by around 3%, with Pfizer decreased the most for 4.97%. And then let's take a look at Tesla. Tesla today showed an increase of 5.93%, or $6.71 to $119.77. After its long decrease last week, it's showing a strong bounce back as Tesla were supported by dip-grabbing markets. On Friday, the Dow Jones closed 700 points higher, or 2.13%, while the Nasdaq and S&P 500 gained 2.56% and 2.28% respectively. The U.S. non-farm payrolls data for December released on the same day may be cooling U.S. inflation. Wells Fargo analyst Christopher Harvey said, "The S&P 500 performance on Friday confirmed our expectation for 2023. The monthly non-farm payrolls report will be the new CPI. This year's labor market data will set the tone for volatility, hawkish or dovish, in the Fed's stance." Harvey said Fed officials said in the minutes that interest rates needed to remain high for some time, made investors pessimistic, but the subsequent release of economic data helped investors shake off pessimism. BlackRock's Global Chief Investment Officer for Fixed Income said the jobs report and news of layoffs across industries suggests the labor market is softening. But labor demand in the services sector remains high and is likely to continue for some time, with the Fed having more work to do. Morgan Stanley strategist said U.S. stocks faced losses for far more than many pessimists expected, and a recession could exacerbate the biggest annual decline since the global financial crisis. Michael Wilson, one of the most outspoken U.S. stock market bears in a long time, said that while investors are generally pessimistic about the economic growth outlook, corporate profit forecasts remain too high, and equity risk premiums are at their lowest level since early 2008. So the S&P 500 could fall well below the market current estimate of 3,500 to 3,600 points in a mild recession scenario. The market consensus may go in the right direction, but the magnitude is wrong, Wilson said. He reminded investors that the benchmark index could bottom around 3,000 points, about 22% below current levels. That's all I have for today. Don't forget to subscribe and like. See you next episode.